Today, Ether drops as the two-day Fed meeting kicks off. BlackRock-linked RWA platform Securitize is going public. And Strategy's Michael Saylor weighs in on the rise of digital asset treasuries from the fintech event Money 2020 in Las Vegas. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Cryptocurrencies are mixed as the two-day Fed meeting kicked off today, where the central bank is expected to cut its benchmark rate for a second time this year. As of noon Eastern, Bitcoin fell slightly to $114,600. Ether dropped nearly 2% to $4,096, and Crypto.com's Cronos token, the outlier of the bunch, jumped more than 6% after the crypto exchange and President Trump's social media platform Truth Social announced a partnership. We'll have more on that in just a bit, but first, let's check out some more of the top stories. Securitize, the BlackRock-linked real-world assets platform, is going public through a merger with a special-purpose acquisition company. That's according to Securitize CEO Carlos Domingo, who told CNBC in an exclusive interview that tokenization is what everyone is talking about, but there is no publicly traded company out there that is currently involved in it. The fintech firm will merge with a blank check firm sponsored by a Cantor Fitzgerald affiliate that trades under the ticker CEPT. After the merger, the new entity would trade on the NASDAQ under the ticker SECZ. The deal put Securitize at a $1.25 billion valuation in pre-money equity. Securitize has been a major player in the tokenization space. Back in 2024, it partnered with BlackRock to power its tokenized money market fund. Next, Circle CEO Jeremy Allaire joined CNBC's Money Movers this morning, where he announced the launch of a new blockchain business called Arc. It's an open Layer 1 blockchain network designed to meet the needs of developers and companies bringing more economic activity on-chain. Companies joining the testnet include Goldman Sachs, BlackRock, MasterCard, Invesco, and HSBC.
Payments is a great application, and so stablecoin money as a way to do payments, or as a way, for example, to do foreign exchange, or to do lending, or to do agentic commerce or agentic payments. There are so many different parts of the financial system, and we typically think about storing and moving money because obviously we're quite significant in that with USDC and stablecoins, but more and more, it's actually about the other building blocks of the financial system. It's the actual trading markets, the exchange markets, collateral, financial contracts that exist between firms. So more and more of the financial guts of the way the economy works is going to actually move onto the internet. And ARC represents a new operating system, in a sense, for that activity.
Allaire told CNBC that he sees tremendous revenue potential for Circle and the businesses who build on top of ARC with this new blockchain. As of noon, Circle shares fell 2.7%. Back to that new partnership between Crypto.com and Trump's social media company Truth Social as we round out today's top stories. As of midday, Trump media shares rose after that partnership to launch prediction markets on Truth Social called Truth Predict was announced. Crypto.com CEO Chris Marszalek spoke about the new partnership, saying in a statement that prediction markets are poised to be a multi-deca-billion-dollar industry and that Crypto.com is thrilled to support the world's first prediction market on a social media platform. According to the announcement, the partnership would also allow users to convert rewards earned on Truth Social platforms called Truth Gems to Crypto.com's Cronos token. The Cronos tokens can then be used to buy Truth Predict contracts. All right, for our main story, Money 2020 kicked off this week in Las Vegas, and Crypto World's Mackenzie Segallo sat down with Strategy Executive Chairman Michael Saylor. The company pioneered the strategy of corporate crypto holdings, and Mackenzie asked him about the rise of digital asset treasuries holding all kinds of cryptocurrencies.
Michael, this is your first interview since the S&P granted its very first rating to a Bitcoin-focused company. Is that correct?
That's correct.
So tell me about this announcement, what the significance is to the industry.
Well, the news just came out today. S&P put out a press release that they've granted, for the first time, to a Bitcoin treasury company a credit rating. So we were rated as a B-.
Is that fair?
It's a start. We expect to move up in the ratings over time, but we think it's a very auspicious start because it represents institutional adoption of Bitcoin-backed credit. And of course, the most exciting thing we've done this year are 4 IPOs of 4 digital credit instruments: Strike, Strife, Stride, and Stretch of late. And now that we've got an S&P credit rating, that's going to open up the market. There are hundreds of billions, if not trillions of dollars of capital that won't buy an unrated instrument that can go ahead and acquire a rated credit instrument. So it's really a great day for us and for the entire crypto industry, I think.
This was the summer of the DAT trades, the digital asset treasury companies that kept springing up, whether it was holding Bitcoin or Solana or name your altcoin. What do you think of this? I mean, it's flattery or imitation, the greatest form of flattery is imitation, or whatever the phrase is. What is your take on all of these DATs? Is it a good thing for the industry? Is it oversaturated at this point?
I think there was only one company that was capitalized on a digital asset in 2020 when we did it. We were the first. And then there were about 10, and then there were 20, and about a year ago there were 60, and then there were 120, and now we're exploding to 250. I think it's indicative of the digital transformation of the capital markets. I think we're going to see 500 companies, then 1,000, then 2,000, then 5,000. Eventually, I don't know why every forward-thinking company wouldn't start to hold some digital assets on their balance sheets. So I think it's an idea as time has come. I think it'll be good for the entire industry, the digital assets industry. But I think it's also good for the 50,000 publicly traded companies that aren't capitalized on digital assets. It's like saying, well, I've noticed 250 companies have the internet and have a website now. How many, is that good or bad for you? And I think eventually every company has electricity, and every company has a website, and every company will have digital assets because there's smarter, faster, stronger ways to create shareholder value.
So many of my conversations over the last few days have been with traditional payment networks. So whether it's a Visa or an Amex, and the work that they're doing with the generative AI players, sometimes in the context of agentic commerce, or other ways to just be a part of the, I don't know, the cutting edge, what the financial stack looks like now. Where does cryptocurrency fit into that, or Bitcoin in particular?
Well, I think that if you look forward, you can see that there's 1 billion AIs that are going to want to do business with 1 billion AIs representing you and me and 8 billion people and 400 million companies. They're going to want to do that business at the speed of light. They're going to want to be trading 1 billion times an hour, not 1 million times a second. They're not going to have any patience for 20th century techniques. They're not going to want to wait for a week for a wire to be transferred. So I think it's inevitable that you're going to see stable coins, especially US dollar-backed stable coins, that are going to explode from it was a $100 billion business a year ago to 250 billion to 500 to a trillion to 2 trillion. Eventually, I think there'll be $10 trillion worth of stable coin moving at the speed of light, millions of times a second. And I think that that'll be the medium of exchange in the digital economy. And then I think the store of value, the capital asset in the digital economy will be Bitcoin. These AIs are going to want to capitalize on Bitcoin. If you want to release something into cyberspace and have it live forever, how are you going to capitalize it? You're going to load it up with some Bitcoin. The Bitcoin is going to continue to appreciate in value. So you don't need to be a person to own Bitcoin. And you don't need to be a person to move stable coins around. And one thing I'm sure is that people are not going to think as quick, and they're not going to be as smart, and they're not going to work as hard as the robots and the AIs are. So it'll be a digital economy on digital rails with digital currency and digital capital, and that again is auspicious for the industry, but also it's good for the human race.
I'd be remiss not to ask you about where the industry is headed with respect to the markets and the price charts and all of that. And I say that keeping in mind that we saw this huge surge in the price as we saw the spot Bitcoin ETFs come online and a lot of that institutional money flow in, and that was absent the banks actually custodying the cryptocurrencies themselves, which has been seen as another potential unlock. These digital asset treasury strategies, also more upside, it seems, in the crypto in the crypto charts. Talk to me about where you see Bitcoin hitting at the end of the year and in a year from now when we're back at this conference.
Well, I think Bitcoin's going to continue to grind up. I think the volatility is coming off of it as the industry becomes more structured with more derivatives and more ways to hedge it. Our expectation right now is end of the year, it should be about $150,000. And that's the consensus of the equity analysts that cover our company and the Bitcoin industry right now. I don't know why it won't grind up to $1 million a coin over the next 4 to 8 years. I would think not less than 4, not more than 8. And of course, my long-term forecast is it goes up about 30% a year for the next 20 years, and we're headed toward $20 million Bitcoin.
Michael Saylor also explained the different financial instruments offered by Strategy. You'll be able to check out his full interview from Money 2020 over at cnbc.com/cryptoworld. Okay, that's all for today. We'll be back again tomorrow, and we'll see you then.